Thanks for joining us and welcome everyone to this session of Asian Investing Summit 2014. Such a pleasure to introduce and welcome back to Value Conference's Albert Yong and Chan Lee, co-founders and managing partners of Petra Capital Management based in Seoul, Korea. Since founding Petra in 2009, Albert and Chan have delivered about 25% annualized net returns to investors compared to less than 5% for the local index, which I believe is a testament to their disciplined value approach. Today, Albert and Chan will share with us their favorite current equity idea and offer some context on how they approach opportunities in Korea. So without further ado, Albert and Chan, please go ahead.
Thank you very much, Oliver. Good morning. My name is Chan Lee, and I'm the co-founder and managing partner of Petra Capital Management. I am very honored to be here today to present at the 2014 Asian Investing Summit together with my partner, Albert. We'll take this opportunity to explain why Korean equity market continues to offer compelling investing opportunities for international value investors. Before we begin our presentation, let me speak to you briefly about who we are. Petra is a Korean licensed investment management firm based in Seoul, Korea. We're one of a few fund managers in Korea that actually practice the true form of value investing, and we consider ourselves to be disciples of Benjamin Graham. Yes, value investing works very well in Korea, as we have consistently and substantially outperformed the Korean index by applying our value equity strategy in Korea. Since our inception in September 2009, we have achieved an annualized investment return over 24%, whereas the Korean index returned only 4% annually during the same period. As you can see, we have a lot of information to cover today. First part of our presentation will be a brief overview of Korea, and although the MSCI still classifies Korea to be an emerging market, I would like to argue that Korea is not really an emerging market. That aside, Korea has a tremendous long-term prospects, and Korea might be on a track to become next Germany. And after the Korea overview, I will also discuss 4 types of mispricing opportunities that are prevalent in Korea. And then the second part, Barbara will discuss one specific Korean equity idea together with examples of how we can take advantage of these mispricing opportunities uniquely available in Korea. When we discuss Korea today, we're of course talking about Republic of Korea, South Korea. As you can see, Korea is a bit small in terms of land size, about 100,000 kilometers square, about slightly bigger than Switzerland, but in terms of population, Korea has 50 million people, which is about the same size as UK. And with GDP well over US $1 trillion, with foreign exchange reserves more than US $300 billion, Korea is one of the wealthiest countries in the world. The Korean stock market is the 13th largest in the world, with a total market over $1 trillion US dollars, which makes it bigger than Hong Kong, but a little bit smaller than Germany. However, Korea is often overlooked by many international investors because Korea tends to get lost in the headlines of much larger neighbors, China and Japan. Korea has gone through a truly remarkable transformation in 60 years, going from one of the poorest countries in the world to one of the richest in Asia, while transitioning to a full democracy in such a short time. Only back in the 1950s, Korea was as poor as Kenya with GDP per capita of less than 50 US dollars. Many investors do not realize that Korea's bond rating is now ranked higher than that of Japan and China. As you can see in this chart, both Fitch, actually all three, Fitch, S&P, Moody's, upgraded Korea to be AA minus level. And also if you look at the Korean sovereign debt to GDP ratio, which is less than 40%, makes it to be one of the best in the world. Unlike other Asian countries or other emerging markets, Korean industry structure is quite well diversified. As you can see in the graphs, yes, IT makes up the largest sector because of Samsung Electronics and other related companies, but unlike China, which is more heavy on financials, Taiwan, IT, Korea is quite well diversified in terms of industry structure. 14 Korean companies made into the list of 2013 Fortune Global 500 companies. Some of the brands you already probably recognize. Here's another slide on some of the champions or global companies from Korea. Samsung Galaxy, basically it's the largest mobile phone brands in the world, recently overtaking iPhone as #1 market share holder in smartphones. And Hyundai Motor with the Kia is 4th largest automaker in the world. And the shipbuilding industry is dominated by top 3 companies, Daewoo Shipping and Marine Engineering, and Hyundai Heavy, and also Samsung Heavy. Basically, Korea is home to some of the top global companies in the world. Koreans are known for their strong emphasis on education, and Korea has one of the highest educated working labor forces in the world. As you can see in the chart, Korean students' performance in reading and math is one of the best in the OECD, and nearly 75% of the Korean age group between 25 to 34 has a college degree. Korea boasts one of the best infrastructures in the world, especially in terms of internet. Korea has the world best 83% internet penetration, and this is a high-speed internet penetration, and close to 80% of the entire Korean population uses smartphones, mostly on LTE. According to a forecast made by Goldman Sachs, Korea is to become one of the wealthiest countries by year 2050 in terms of GDP per capita. And this is this forecast was made on assumption that South Korea will reunify with North Korea in the not too far distant future. Korea's short-term outlook appears to be also in pretty good shape, as Korea is likely to benefit from the recoveries by U.S. and European economies. Nearly 50% of Korea's exports to China are considered to be intermediate goods, which China processes and ships on to U.S. and Europe. Despite the recent underperformance of Korean market, Korean stock market has performed very well in the past 10 years, basically outpacing both U.S. and Japan. Despite all the positive developments in Korea, as I discussed today, Korea is still one of the cheapest equity markets in the world. The chart here shows the P and PB ratios of the Korean stock market relative to other major markets. Korea is one of the cheapest, cheaper than Taiwan, India, and Mexico. We can easily spot numerous competitive Korean companies trading at discounts to book value with a single-digit P ratio. We understand that Korea was once notorious for lacking corporate governance, and many international investors have avoided Korean stock market for this particular reason. However, we're definitely now witnessing a steady and substantial progress in regulatory reforms and market practice that have resulted in more transparency and protection for minority shareholders. The two gentlemen shown in the right are the chairmen of two well-known Korean chambers, SK Group and CJ Group. Both of them are currently serving their time in jail without suspension for breach of their fiduciary duty and in connection with some irregular transactions among the affiliate companies. This type of strict reinforcement punishment would have not been possible 5 years ago. As you can imagine, their imprisonment is sending a strong signal to market participants. Another concern for many international investors in Korea is North Korea. As you can see in the chart, however, South Korea is much bigger than, almost 40 times bigger than North Korea in terms of economy size, and even in terms of military budget. Korea's annual military budget is about 25 billion, whereas the North Korean budget is 5 billion, so which is 5 times larger. Plus, Korea has the backing of the strong U.S. Army troops, about 30,000 military troops in Korea. The picture on the right shows that North Korea is completely dark during nighttime. It's a sharp contrast with the bright South Korea. Those of you who are really concerned about potential North Korean military invasion to South Korea, we believe that such threat is highly improbable and not realistic. To be honest, North Korea is simply too poor to start any war, and it's very clear to everybody that who's going to win a war if it ever happens. Another concern that a lot of international investors raise about Korea is competition against Japanese yen or against Japanese companies. If you look at this graph here, Japanese yen started to weaken greatly since third quarter of 2012. However, if you look at the trade numbers, it appears that the weakening of Japanese yen did not affect Korea much at all. So once again, we think that this is an example of herd mentality, and many investors are actually betting on short-term wager on Japanese market. But once again, I think that the real factor will be whether Japanese economy will be able to require reforms to become competitive again. So basically, this is a summary of what I have just discussed. Korea is no emerging market. We think that Korea is a long-term powerhouse and will remain to be competitive. However, Korea tends to get lost because it sits in between two giants of Asia, China and Japan. And North Korea is home to the world's most successful companies with leading technology and skilled labor forces and highly educated management. Korea also has many competitive, relatively unknown companies that are poised to become global brands. And once again, for value investors, the fact that Korean stocks are still cheap is gives another reason to invest. And also, Korea offers various mispricing opportunities. They're uniquely available in Korea. I'll discuss those mispricing opportunities in the next few slides. So I would say there are 4 major types of mispricing opportunities in Korea that value investors can take advantage of. As you know, all value investors start from the premise that the market is not efficient. First type of mispricing opportunities in Korea is none other than classic Benjamin Graham's net companies, as defined by Graham, the father of value investing. Net company is a company that is basically selling below the reproduction cost of its current assets. Surprisingly, there are still many publicly listed companies in Korea which can be categorized as net companies. Some examples are shown here. However, you want to be very careful in investing in nets because we believe that some of them are permanently cheap for a reason. The second type of mispricing opportunity is something that has been well publicized to international investors. Most of Korean preferred stocks trade at steep discount, and that has been the case for many, many years. Obviously, the market is very rational. We think that this gap will eventually get narrower in the long run. However, we try to be selective, and we do not necessarily jump at preferred stocks just because they're much cheaper than common stocks. As you know, the gap can also be closed if the stock price of common goes down. Therefore, unless you're doing a sort of pair trading type of investing, you still need to perform detailed fundamental analysis of company before attempting to exploit preferred stock discounts if you want to avoid falling into a value trap. Third type of mispricing opportunity in Korea happens to be one of our favorites at this time, but is relatively unknown to international investors. We call it holding company discount or parent company discount. In the past decade or so, many of the Korean public companies have transformed into a holding company structure by spinning off the business operation, resulting in public listing of both holding companies and its subsidiary. We view this to be a positive development for investors because such transformation increases the transparency of parent company and also allows investors to invest directly into operating subsidiary. This probably means the operating subsidiary deserves a higher multiple. However, it does not mean that a holding company should be trading at unreasonable excessive discount compared to the value of its equity stake in public listed subsidiary. For some reason, we discovered that this kind of exorbitant discounts are quite common in Korea, although the empirical evidence seems to indicate that such excessive discounts are rather short-lived. The fourth type of mispricing opportunity in Korea is basically the companies that are holding excessive cash value, which can be a potential target for shareholder activism. If you look at some of the valuation of Korean companies in the Korean stock market are pretty much reminiscent of the valuation of companies in the U.S. that attracted activist and LBO buyers in 1970s and 80s. As I discussed earlier, the corporate governance and the rule of law have improved significantly in Korea, and we think that there are many opportunities for activist type investors who can propose certain corporate actions to unlock the shareholder value, typically demanding for higher dividends and buying back shares.